No assumption on trade receivables. What is it? Okay. Okay, others? Perfect. Not loan. Ha. Okay, now one thing you have to understand. Akshay is okay. Kishore is into paper making business. He makes paper. He has a paper industry. Akshay has that pulp, which is used for this paper making. Okay. Kirtana is one who makes books, but does not make paper. So, for Kishore, the raw material is pulp from Akshay. And for Kirtana, it is from Kishore. Now, usually, I mean, it may also happen at even for the lower end it happens, but usually for the big industries, what happens is, whenever we have, for example, Akshay says, I want some 1,000 tons of pulp, and Kirtana asks for some 100 million pages. Okay. If Akshay has it, he will send it right away. If Kirtana has it, if Kishore has the paper, he will send it right away. Or if it after production, he'll send it. Okay. One thing that is not happening here is the transaction of money. Okay. Here, Kishore says that after 60 days, I will give you 10 crores for this. Based on the current price, that price only, they will decide that 10 crores I'll give you. I am taking the raw materials, but I'll pay you after 60 days. Similarly, Kirtana says that I will print the books. You give me the pages or papers. I will give you after some 45 days, or maybe even high. Okay. So 45 days means whose liability is where? Now who has to pay to whom? Kishore has to pay to Akshay some 10 crores. Kirtana has to pay something 15 crores, for example, to Kishore. Okay. Now, for Kirtana, it is a trade receivable, a trade liability. But for Kishore, this is asset. Here, now again 10 he will give to Akshay. So for him also it is an asset, trade receivable. He does not has in his act, but it is a current asset which will come under some time. Now, for calculating the balance sheet from Kirtana's balance sheet is easy. Even Akshay's balance sheet is easy if he has not taken from someone else's here, because she is taking a trade liability of 45 days, which is 15 crores. We can easily calculate. Similarly, for Akshay, he has to receive 10 crores, so you can add 10 crores in his balance sheet. But when it comes to Kishore, you have to consider both things: receivable and liability. That is 15 crores of receivable, 10 crores of liability. Then after that, you have to remove it. I mean, for this 10-15 crores, it seems very easy, but then for larger amount, you have to understand how it is working. Clear, no? Any doubts? I think every quarter. Every quarter. It will show as what do you say, trade receivable only. If he has already paid to Akshay, then that trade liability will not be there. But for trade receivable, it will show. If you are not paying, he'll come to your home and he'll take money. Clear no here? Now this next part is very interesting. Might be funny. You can unmute and speak anytime. See, now other asset liabilities and all are very easy to understand. Okay. It can be you have taken some loan or something, that all that are easy liabilities to understand. Again, current, non-current, you can associate with the asset part, how we have taken. Okay, loan, also this trade one. Okay, even softwares which we have taken, even that can be an liability if we are paying something for that, some amount for that. Okay, now one funny part is, whenever we are creating a company, we have option of debt or equity. Okay, this is directly an liability. Without any doubt, you will say this is an liability for us. Okay, because here two things, we have the principal amount and then we have the interest, both we have to pay. What about equity? What is it? Come on. Hey, am I audible? Okay, so whenever you are creating a company, okay, I'll repeat, just a minute. I'll erase this. I'll erase this completely. Why am I taking this much tension? So whenever you are expanding a company or creating a company or doing whatever, okay, when you have to make your company big, you have two major options. Okay, one is debt, that is loan. It might be bonds or any kind of thing. It is usually for interest, some interest. It is, and other one is equity. Okay, here you have two things to pay, which is directly reflected in your balance sheet. That is principal amount, and then there is some interest. Okay, this is directly a liability. Without any doubt, you can say this, right? What about equity? Correct. Correct. Dividend. Correct. It is a asset or liability? You have to answer. I'll tell you later on. Answer it. Answer it with a reason. Why? Okay. Others? For whom? You or the company? Okay. Equity is an asset according to you, if it performs well. What is equity according to you? It can be even you, no? You can take 10 shares and you can still be a part of the company. I still did not get the point from you. I did not understand what you wanted to say. Right or wrong, I want to understand it. Okay. So Here ABC is taking money. Yes. 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 But what if I say profit is a liability? Yes. I'll explain. No, I'm just telling you. What? Yes. So this is where you slightly went wrong, Kirtana. Akshay was right. Kishore was right. Now I'll tell you how. You remember I told the name balance sheet comes with the same agenda of it. Asset and liability are equal, and this is where you have to understand it. See, liabilities, you can understand how liabilities are calculated, but this is a very funny picture here. So equity, why do you invest in a company? To get profit. Correct. And when you will get profit? When the company grows. And if the company grows, automatically that profit will be coming back to company again. So there's one thing that will happen. Okay, it's again the shareholders who decide who are the board members of the company. Okay, management of the company. For example, we say ABC company, they have some 200. Okay, no, we'll say they have some shares, some n number of shares. They have some, this year they have some 2000 crores of profit. Okay, now here there are many other things that has to be considered. We'll come to that, but we'll say we'll just see this number. They have 2000 crores of profit. Okay, out of which 90% of them are shareholders, equity holders, for which they have given, and others can be HNI or other stuff which would come under this, or even promoters. Okay, all these people will leave it for right now. We'll consider only the equity people. Okay, now here there are two possibilities. How will your company grow? If ABC, from this it has to become this, so it has to invest back some money. Correct. Okay, so if we are investing back some money, there is an asset that is becoming. For example, you said that I will give away 200 crores as dividend. So you are giving the share amount of, I mean, some profit, only some amount of profit back to the actual owners of the company. But then you are reinvesting the money here back. So you are creating an asset of 1800 crores. Correct. Wherein this 1800 crores is a liability which had to be given for your shareholders or the owners of the company. This is where this picture becomes equal. You're understanding this? That's why I told it might be confusing. Please let me know where you're not understanding. Yes. What, 200 crores? 1800 crores, you are using it to the company. So you are making some asset, you are buying raw materials, or buying whatever you want. But you are creating an asset. No, for not for the shareholder. It is for the company. That it is a liability for the company to give it for the shareholders. Correct. Correct. I'll show you. Wait. So until here for others clear or any doubts before I explain it again. Okay. So for example, we will again take two companies. Aishwarya and Kirtana has one own company. Okay. Now we are not taking too many people. We are taking only two people here. She has a company of 100 crores. Kirtana invested some again around, we'll say 50 crores. It became 150 crores. Okay. Now Kirtana is owner of almost, I think, some amount of the company. I think it would be some 33%. Okay. Here, next year they have some profit of, we'll say 100 crores. We'll keep it very simple. So this profit has to be shared between Aishwarya, that is 66% or point something, 33.3 to Kirtana. Correct? Now there are board members which these two have chosen. We'll say Kishore is the board member or head of that board. What they decide is 100 crores we have in the company. If we have to make this company little more bigger, what we will do here is, for this 150 crore company which we already have, we'll invest 90 more crores and we'll make this company of worth 240 crores. We have 10 crores left. What we will do is we'll give it back to the shareholders as bonus or whatever they want, dividends or in many other forms. Okay, dividends. So she will get some 3 crores, she will get some 9 crores. Now ideally, what Kirtana, if Kirtana is greedy at this point, what she will do, she'll say that no, I want my 33 crores instead of 3 crores only. Correct? But you understand that the company is growing here and this is your money. Now you have to understand one funny part here. In this 240 crores, if you take 33% out, you will get more than 50 crores, right? And Aishwarya will get more than 100, I think nearby more than 150 crores. Correct? No. So as a owner, you have more money than you had invested. Correct? But as a profit, you have not got it back. Company's value has increased, but you have not got that money back. So, and that value has increased, taking your money and making that company even more bigger. So is this a liability or an asset now? See, you are creating an asset for the company 100%, but the company has to pay you back, right? Anytime. See, now it is more funny. What might happen tomorrow? You'll say that I'm angry with the management. You will sell this 33% to Akshay. Okay, you'll say that give me some. I had paid 50 crores. Give me 53 crores. I'll sell it. You'll sell it to Akshay, but actually Akshay got 70,000 or around 80 crores or 70 crores of company in 53 crores. You made a loss here. Actually, maybe company would unlock this value. Maybe instead of making one, they were selling one share. They will say 2 shares plus 1 bonus, something. They'll do it. Value of the company is still more, which Akshay got it. Actually, you did not unlock that value and you did not keep it. So company was already liable to pay you, but you did not take the liability as your asset and you left it. I mean, I'm not telling for you, but in general terms, as a shareholders, this is a major mistake which we do. We don't take the complete value which we have made actually out of it. Clear no here? Others, any doubts? Correct. So, okay, you had invested 100, she had invested 50, you had profit of 100 crores again, so you got some 66 crores, she got 33 crores. So your value became 166 crore, her value became some 83 crores, which is again 66%, 33% of the company. Clear? Any other doubts on this? No doubts? Shall I proceed to one more, I think last topic on this? Can I? So this is good one. Okay, so one funny part of this is, for example, Akshay manufactures a phone called as Y phone. Okay, value might be some 1 lakh. Now what happens here, he has customers called Ratan. I mean, there might be many, but then they have I am specifying them for some reason. Okay, Kirtana, and then I'll take Karthik. Okay, what happens here, Ratan has some camera problems in his mobile, Kirtana's screen is not working, Karthik's software is not working. Okay, one part here is Akshay had already, I mean, all this were sold some 6-7 months ago, minimum 6-7 months ago. So with the quarterly, every 3 months which they have reports, with the quarterly meeting, they had already shown this profits or losses or whatever they have already shown here. But then they would add one more thing in their every quarter sale. Okay, what is this here now? What happens if no, what happens when your mobile is gone wrong in a year, or else, okay, if you're buying some product, what do you look for first? Apart, perfect, warranty. You'll claim a warranty here, for which Akshay will not charge you money, he will do it for free of cost. Correct? So in any liability, there is an estimate made. I'm saying again, estimate. There is an estimate made for warranty claims already. They foresee that for this coming quarter or coming year, for this 1 year, this is an amount of money which we would require. Okay, this is called actually I mean, there are 4-5 things in total, they are called as provisioning. Okay, provisioning means understanding of things and then giving money for that, keeping money for that. Any other things like this? I mean, this is a liability, because you have to repair or give new parts without any cost. So this is a liability for you. Any other similar things which you can note it down here? No, anything, any company. which you think, okay, this is right. What is pre-succession on what? Correct. So if you know, we have this free trial or 60 days, 30 days money back guarantee. Correct. This is also a liability which we have to keep. One major thing you have to remember, these companies have huge liabilities only on because of this. If you go and check the liabilities of provisioning, the provisioning which they do is little higher here for them, because they don't know the amount of death rates that can happen. Medical insurance companies, gratuity, so all these are part of the provisioning or the liability things which you have to check into. Any doubts here? No doubts? Yes, yes. Product return is also part of liability. They have to keep. I mean, this is called as short-term provisioning. So they have to do provisioning for long-term and short-term both. So these are liabilities. I mean, there are all assets and liability terms are same. But then why I'm explaining these things, that these are extra part of your liability. I mean, liabilities which are usually not there in our asset terms. So whenever there is an extra amount earned, provisioning done, you probably heard in any of the channels if you watch, this company has done extra provisioning or something. Provisioning is what they are keeping some extra money for a safer future if they have a right or wrong time of things happening with them. Clear? Any doubts here? Karthik, understood why balance sheet is have equal assets and liabilities in total? Clear, no? Okay. I was about to end it. One last. I mean, end as in this part. One last part. Just to tell you, if you read somewhere, you must remember it. Uh, you have heard about this current account, right? Yes. What is very special about this? Okay. Correct. So yes, there is no limit for the daily transaction, but there is one more benefit of this current accounts or business accounts. That is, for example, if Akshay has a current account of 100 crores, he can withdraw 150 crores from that bank at that day. Yes, perfect. This is called as bank overdraft. This is also an liability. This 50 crores is a liability. I mean, I was about to forget this, but then I remember it. This is where the liability part ends. Any doubts here? Depends on bank to bank, the terms and conditions which they have signed. See, for every company, they have different terms and conditions based on the account type they have, based on the amount they have. So this varies. This we cannot decide. Hmm. Yes, yes. But then usually ODs are for short term. Correct. It is like personal loan on steroids. So the amount of interest is high here, but then yes, it is an asset. But usually this asset comes in, for example, for banks. If you see, it will not come as overdraft. It will come as short term. What we say, receivables, trade receivables or something. So it will not come as OD there. Clear, no? Any other doubts on this, guys? Okay, so we are done with balance sheet. We are done with what is it?